Well, hi there, everyone, and welcome to the VIP Trade Room with Roger Scott and Matt Horton. Now, today is Friday, March 6th, and my name is Raleigh White, and I'm coming to you live from a cloudy, overcast day here in Austin, Texas. And folks, we're praying for some rain. It's been a while, so we could use some this weekend. Anyway, I'm going to be your moderator today, and in today's session, Roger is going to be covering a range of important topics with a continued focus on day trading with the Trading Zone Live. Now, he's going to start with a midday market analysis and his updated large cap watch list. And then we're going to pivot. He's going to talk more about market internals and more specifically, when they cannot be trusted. Okay, when they cannot be trusted. He's also going to talk about when to trade reversals, breakouts, and pullbacks. He's going to share how we can spot a low probability trading environment and the difference between high probability scalps versus low probability position trades. And finally, guys, he's got a lot of questions have come in as to when to use zero dated and versus one dated options, and he's going to talk about that for day trades. Now, if you've got any questions during Roger's presentation, please type them in the chat window and we'll address them periodically throughout the session so as to not interfere with Roger's presentation. And remember, folks, that we have the chat room open to everyone and we do have some ground rules. Folks, always be kind and supportive in your posts. Always, if you can, just keep to the topic. No political discussions allowed whatsoever. And keep that chit chat between one or two of you to a minimum because this is not a chat room. This is a place where all of us have come to listen and to learn from what Roger's going to be sharing with us, because after all, he's all here to give us an edge in the markets and to help us become much more consistent and confident in our trading activities. Now, if you were with us this morning at 8 o'clock Eastern Time for Roger's pre-market must watch, well, you would have noted that there were several catalysts on tap that we needed to be aware of. On chips, we noted that Micron and Lam Industries both came down about 1% into the open. On the tech front, we saw that CN was up 1%. Crude oil prices up 6%, over $85 a barrel, and that's the highest level in the past 23 months. And it was obviously having a ripple effect through many industries and segments. On the healthcare front, we saw that Cooper was down 3% into the open, and then we had the Fed, big Fed day. We had hourly earnings come out, we had retail sales data come out, we had employment change data come out, which was surprisingly negative, and we also saw that the employment rate ticked up a bit. And look at this, folks, 10 FOMC speakers on tap today. And they're not all in one place. They're talking at various conferences and conventions around the United States. So these were the key catalysts. And for those of you that are wondering, why do we focus on this? Well, if you've spent any time at all with Roger, you know that he likes to start with a macro view as to what's going on in the market. And part of that is focused on, is there information that is either known or will become known during the trading session that's not yet priced into the market? And if so, whatever that is, these catalysts represent volatility flashpoints, which means we just need to be careful about taking trades that might be impacted by any of these catalysts. So, now, as far as Roger's pre-market stock watch list is concerned, you'll note that he gave us 12 tickers to look for, and he admitted, he said, look, guys, I'm having a hard time finding quality shorts and longs. Now, on the short side, we see that there were 7 stocks, and on the long side, just 5 stocks. Now, note that there are several of these that are underscored, all right? On the short side, we saw that FSLR, I think that's Fast Solar, and PI are both underlined. What that means is that when Roger looked at those, and once again, each one of these tickers, he brings up the chart and he tells the story of the chart. He said, I really like these, okay? I'm going to keep a sharp eye on these. And the same on the longs here, you can see that there were 3, WM, out, and CZR. He said, I really like the way these things are setting up. Now, let's be clear. These are watch lists. That doesn't mean these are trades that you should take or Roger's automatically going to take, but they are setting up to be potential nice entries. And if any of these meets Roger's very, very strict requirements for what he wants to see for whether it's a day trade or a swing trade, more than likely he will take that ticker as a trade and he'll share that in the trading pit or in another of his premium alert services. Now, as far as Roger's pre-open thoughts are concerned, we did note right at the top that the futures indices were all moving lower into the open. Nothing random here. It doesn't matter whether you were the Dow, whether you the NQ, whether the S&P 500, you were all down pretty sharply. We did also notice that the put to call ratio was in balance, not favoring puts or calls, but the VIX was definitely moving higher and it was above 74 when we first looked at it. It had gone as high as 26 while we were having the session. So the fear factor is high. We noted that bonds were moving lower and were sitting there at major support and basically given up all the gains that they saw on that huge flight to quality the first day that the war broke out. We also noted that the sectors remained mixed, but were definitely starting to shift towards spec stocks as those speculative stock sectors were moving up in the sectors, in the sector rankings. As far as the SPY, the QQQ, the SMH, and the MAGs were concerned, they were all extremely choppy and down in their range. So once again, nothing in and Roger made a point of saying, look, guys, the markets are not collapsing. We're not looking at a crash. We've got a fairly narrow range, that is near all-time highs for all of these indexes, and the markets just seem to be moving within that range. This is not a crash. This is not a 20% correction. Bottom line, folks, be careful, okay? Don't be fearful. But he was expecting that based on the volatility that we saw, in particularly after the reports came out at 8:30, that we could expect a rough open. And he did expect that we were going to have a choppy Friday, in particularly in the afternoon. Bottom line, he says, look, the market hasn't yet priced in the war. And you can tell that because the VIX is way high and so is crude oil. So, from his perspective, if you want a real time gauge as to how the war is impacting the market, watch the VIX and watch the crude. And there was a question that was asked, which is a good one, which was like, Roger, well, how will we know when the war is priced into the market? He says, when VIX drops below 20. When the fear factor drops below 20, you'll know that it's priced in. And I thought that was really sage advice and recommendation. So we've got a great group of folks here today. And what Roger's put together is a wonderful agenda. I think this is a great way to end the week because we've been spending this entire week talking about day trading the markets. And we continue that today. But we're going to begin. Roger's going to begin by giving us a midday market analysis, and he's going to give us his updated watch list. Then he's going to share with us, when market internals, which are so key to his decision-making process, but when they cannot be trusted. That should be very interesting. He's also going to talk about, the best way and times to identify and trade reversals, breakouts, and pullbacks. He's going to talk about how you can spot a low probability trading environment and what that means. And then he's going to share with you the differences between looking at taking a high probability scalp versus a low probability position trade. And finally, we have a lot of questions from people that are saying, hey, zero dated versus one dated options. Roger, which way should I go? What's your recommendation? Well, he has a very simple approach to that. He wants to make sure that he clears that up. So that's what we'll be talking about today. Now, if you've got any questions during Roger's presentation, please put them in the chat window and we'll address them periodically throughout the session so as to not interfere with his presentation. And also, folks, the chat room is open to everyone and we're glad to do that. But there are some ground rules. Always be kind and supportive in your posts. Try, wherever possible, please keep to the topic. Also, no political discussions allowed here whatsoever, and keep that chit chat between one or two of you to a bare minimum, because all it does is interfere with the rest of us that are trying hard to learn from the information that Roger's sharing with us, because after all, folks, he is here to give us an edge in the markets and to help us become much more confident and consistent in our trading activities. And with that, let's say hi to the team. Matt, good to see you, my man. Roger.
Hey,
Good to see you.
Good to
Matt, you
see you.
are a tiger. Matt is a bulldog. He is a bulldog. And the only reason why I say that is because I know what he's doing, I know what he's looking at, and I know what you're expecting from the spy.
Good.
And
He
your
is a bulldog.
discipline and your patience is phenomenal, dude. Hats off to you.
He's a
Thank you.
Rod,
pit bull, not a bulldog, a pit bull.
a pit bull. That's what I was looking
A
for. You
pit
mean like a
bull.
dog is
I
above?
always call my wife a bulldog and she gets insulted. She's like, I'm a pit bull. I'm not a bulldog. Stop calling me a bulldog. I do it all the time. That's how I know. The only way I know the difference is I do it all the time, you know?
Yeah. And so, Roger, man, overnight activity, holy smoke. The reports come out today, and boy, you talk about slapdowns, it's like it was
Yeah.
a big surprise. And initially, I think the markets were like, what? And then they
Yeah.
went, oh,
Yeah.
and they
Yeah.
just took off. But I like your comment. It's like, and I know so many people said, well, Roger, is the market crashing, this, that, and the other thing? You were going like, wait a minute, folks, let's keep things in perspective. The
Yeah.
market structure isn't down. We're trading at all or a few points from all-time highs. We're trading in a range, nothing approaching a 20% correction. And I just thought that you did a great job of just calming people down. And that being the case, it's choppy, it's highly volatile, and you need to be careful with what you're doing. But we're not looking at a market crash at this point.
No, 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 no. We're still pretty choppy. No, no. I'm not seeing any market crash. As a matter of fact, let me share my screen. And I want to confirm that you guys got your regular emails and your SMS alerts went on. Just give me a heads up. Let me know if just want to make sure everything went on. And if you usually don't get them, that's not what I mean. Like the people that usually get them, not if you've unsubscribed or anything like that. Mm-mm. Okay, cool. All right. Yeah, if you look at the SPY right now, it's hard to look at the SPY with all this crap here. Here. All right. If you look at the SPY here, this is just consolidation. There's just not much here. A breakdown looks like this. This is what a breakdown looks like. This is what a breakdown looks like. High volume candles going down, capitulation. This is just choppiness below the 100-day. This is very, very different. Okay, cool. Thank you. This is very different. This is just the market doing its thing. It's still very, very choppy. And you could see we've already been in this range. We were in this range on I think this was on Tuesday. Tuesday, yes. And nothing really changed from that here. Now, if you look at the QQQ, you'll notice that we're actually above that range here. Let me delete all this stuff. You could see that we're still in this choppiness. There's not much there. Mags are still holding on here. There just isn't much there. And a lot of people feel like or think this is a correction or a bear market, but we're not. We're still at 50% of the market is above the 50-day moving average. It's just a real grinding. Oh, okay. Yeah, this is just a mean grinding market without much directional bias. That's all it is. That's all it really, really is. And I showed you that this morning. I was here. Let me show you something. When we were looking at Stock Fetcher and we were looking at the number of stocks making 90-day low, here, this is right. So this is right now, okay? Right now. Right now. Remember, the day's not over yet. This is how we came into the day at 92. So if the market continues pulling up, and I don't know if it will or not, but if the market continues pulling up right now, then this will go back. But even this morning, it was below 100. And even now, we have 157 stocks breaking down. This is not a market crash. I want to see 900 stocks breaking down, 1,000 stocks breaking down, not 157. And to the high side, 46, and this morning we had 60. There's just not that much momentum. Now, something I do want to tell you, the 20-day breakdown, we're now getting into the 500s. Now, typically when we get into the 500s, on the upside, when we get into the mid 400s, that usually is the peak and we need to bounce. The 20-day breakdown is now over 500, but this is on the downside, and this can be a little more dramatic because its downside pressure is heavier. People tend to panic more than their panic level is higher than their greed level. Okay,
That's true.
it's true. Fear is a greater emotion than greed, which is why the markets go down 3 times faster than they go up. Okay. What I just said was really important. I hope you wrote it down. Something I've been thinking about for over 20 years now. The markets go down 3 times faster than they go up because fear is a 3 times stronger emotion than greed, as measured by market sentiment. So the 20-day breakdowns is telling us we're getting pretty close to the bottom. Okay. Matter of fact, let me just take you through this. You'll see we don't really get there very often. See 61, 192, 59, 20, 84. It doesn't happen very often. See that? Oh, 397. So look. It went to 390, 373, and then the next day, 50.
Mm-hmm.
You see what I mean? It pops all the way back up. So the number that we're at right now, let's just a few more seconds while I'm talking, is a pretty low number for the 1 month lows and highs. And remember, the odds of continuing, here's another one, 300 and then the next day, 102. So look, we went from 324 to 102. That's telling you it just snap back up like a big lizard's tail, just has that tail. Raleigh, have you become a better trader since you've been in this room?
Yes.
Okay. Oh, wow. You said that very fast. You
No,
didn't even
no, the reason that, and let me tell you why real quickly, Roger. I've always been a slave to the traditional indicators that we all talk about. And you have done a wonderful job of convincing me that in today's environment, the traditional indicators just don't apply whatsoever. So I've had a
No.
lot of fun just reorienting myself around, what the market internal dashboard's teaching and things of that nature, because, it's intellectually, it's much more convincing to me. And I have just been there's a lag sometimes, for
Mm.
example, if I'm day trading the futures and I've got an indicator which, and the internals are telling me, hey, this market's going to move higher. Well, as you know, the SPY doesn't always fall low the volt. It might work against it. So you have to have some fortitude as the market works against your position before it ultimately comes back. And that's just been impressive to me. So once again, Roger, I think for me, I just never looked at the markets as holistically as you train us to do, which is to start with the big picture and narrow down.
You get more perspective that way.
Much more perspective and a lot
Good.
more confidence. And the other thing is this, Roger, I no longer fret about losers. As long
Good.
as the trades I'm taking are high quality entries, that's the only score that I care about.
Yeah, as long as you that's the only thing. My wife, I was kicking myself in the ass a few weeks ago, and my wife asked me what my wife is the worst person for me to talk about trading because she is she's like a cheerleader. She's always trying to get me to trade more. She loves my trading, so she really wants me to trade more and more and very aggressively. She doesn't understand the emotional toll that it takes, from a person. But she trades gold and silver. That's her thing. Anyway, so we were having dinner and she said, "Why are you so cranky?" I said, I broke my rules today. She said, "Well, what happened?" I said, I forgot I had this position and it broke my moving average and I didn't get out of it, and I'm kicking myself in the butt." And she's like, "Well, how much money did you lose?" I said I had, and the amount of shares I had was like, I think it was a leftover position. I had like 25 shares. I mean, it was not even worth talking about.
But that wasn't the point.
No, she looked at me. She looked at me. She's like, "What?" She's like, "Did you say 25 shares?" She's like, "Why are we even having this conversation?" I said, "Because I didn't follow my rules. It's nothing to do with the size. I didn't follow my rules."
Mhm.
I said, I deserve a kick in the ass. I didn't follow my rules. She's like, "But it's 25 shares." I said, "But I didn't follow my rules." See? True story. True story. I swear to you, folks, I'm not kidding. It was a stock that I gave you guys an exit for. It was either Lemonade or Roblox. It was like a month ago. I don't remember which one. And I gave you an exit. You all made money, and I forgot to exit the trade in my account. I forgot to exit the entire trade in my account. So it's just one of those things. I'm human, I do it too sometimes. I'm not, although it's 25 shares, but still, I was so upset. My dinner was ruined because of those 25 shares. And she's like, "But it's 25 shares. Like, why are we even having this conversation?" she's like, of an S&P 500 stock. She's like, why are we even talking about this?
Right.
I said, because it's the point. Okay,
It's
so
the point.
it's the
Yep.
point. Well, I'm glad to hear that. This is the first time I've asked Raleigh this since we've been working together every day, by the way, folks. So it wasn't like a loaded question or anything. I just wanted to hear what he would say. So I didn't mean to put you on the spot, Raleigh. I really
No,
just
no. I
was
mean, I didn't
curious.
mind because, I gave you my immediate
Yeah, you were
and
very quick to respond. So, so
absolutely. Yep.
so I found the day. I did find the day while you and I were chatting. I found the day when price was actually at 589. It took me. I had to go all the way back to November 20th. Okay, so let's take a look and see what happened the next day. 122. Imagine almost 600 stocks breaking down. The next day, 122. Let's just take a quick look at that day. If I'm just curious, right? I'm sure others want to see it too, right? So, see, what I don't like is the fact that crude oil is going up. The higher crude oil goes, the more shenanigans we have with this war. See, I liked how we bottomed out here and didn't break this low. That makes it much more meaningful now. So, November 20th. Let's just take a look at November 20th here. That must be November. Yep, right here. There's your November 20th right here.
Mhm.
So, the last time we had this kind of shenanigans, the market did this, and then look what happened afterwards.
Yep.
And then today we're seeing this, but in all fairness, in all fairness, we're not at 589 just yet. We're at 546 right now. By the way, one of the biggest reasons people keep asking me, why do you still use this stock fetcher? It's like an arcane tool. I mean, you could do all this. I have all this, and I have every one of these scans. Every one of them I have in my TC 2000. You know why I still use this? Because of this time back machine. It gives me this information that I like, and in a format that's very easy for me to read. So it's kind of like I created my own indicator over 20 years by looking at the same data over time. Kind of like my own. And this is why I don't know if Cyrus is here, but this is kind of what I try to tell Cyrus. When Cyrus says the market is fake, the market's fake, my answer is it may be fake, but this is where it is. We have a baseline, you see? As long as we have a baseline, we know where that baseline is, and that baseline is real, we can make judgments based on that.
Sure.
That's kind of what I was trying to say, Cyrus. Every time you say it's a fake market, I'm always thinking about how I use this indicator, because this isn't really an indicator. It's just something I've noticed over the last 20-something years, but it is an indicator because it works so darn well. So anyway, the last time we had this was now, Roger, how come you don't do this on the 90-day lows? I'll tell you why. Because when you have a 90-day low, those can sustain themselves.
Those are trends.
Yeah, that's a trend. But a 1 month high and low, that's turtle soup. That has like 70%, 75% of reverting. Okay, so we're only once this bleeds into the 3 month levels, which it has not at all. And I repeat, it has not at all. This is just a very normal, everyday number we would see. This is an average number right here. So it has not at all. So again, I'm looking, this number is now at a point where it should start turning around. And I showed you November, and I don't want to go clicking back for every time it happens, but I'm pretty sure you guys will take my word for it. And also, I show it to you every morning, and I show you that anytime, I even mentioned it either yesterday or the day before yesterday. I said I'm looking for the number on the upside to get to about 450, and I'm looking at the number to the downside to get into the 500s because fear is a stronger emotion. I said it right here. It was either yesterday or the day before. Anyway, that's where we're at right now. Okay, so I am looking for the market to give us at least a short-term turnaround. Now, one last thing I want to look at before we move on. And by the way, the SPY is only down 1% right now. We're not like, let's not use the word market crash because this is not a market crash. So notice volatility. We did break this level, but we got slapped really hard. And again, look at that. We already have 50% of this here. This is telling us that the market's having a real hard trouble going lower right now. Okay, that's what this is telling us. What I'd like to see is this level get back here today, and it will happen if the market gets higher. The market right now does not have. Thank you, Tony. I appreciate that. the market does not have a lot of gyration right now built into it. It's just very, very choppy. You could see it right here. We're actually going to talk about this right now. It's a perfect example, and this is a very typical Friday. We huff and puff in the morning, nothing happens in the afternoon. And by the way, every afternoon this week, we've been doing that and then going up in the afternoon. We've been also trading above the VWAP pretty much the entire day except for the first half hour. So not all is crap. Okay, I mean there is signs of life here, which I'm very very happy to say. Okay, thank you. All right, let me just quickly post something here. By the way, something else I wanted to share with you, and this is really important. And no, I'm not trying to sell you anything. Do you remember I launched a program, Raleigh, called High Flyers Club?
Yeah, for the
And
small cap stocks. Yep.
yes, you actually just came into the fold on a full-time basis here when we were about to launch it, and you tracked it for me, and I remember we talked about it a lot. So,
Mhm.
do you guys remember one of the biggest reasons why I launched that program? Can anybody remember why? No, it wasn't so I can make more money from you. That wasn't the reason why. Do you guys remember why I launched it? There was a very specific reason why I launched it. Let's see if anybody can remember. There's a magic word. It's one word.
I think I know it.
Well, I know you know it. I don't want to hear from you. I don't want to hear anything from you. You know, the man that doesn't speak, all of a sudden he wants to speak. You be quiet.
I like to win.
Huh?
I like to win.
Do you trade them, by the way?
No.
Oh, I didn't. Yeah, you're too busy. Let's see. Yeah, well, okay. Yes, Kate has it right. Yes, peanut and yes, 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 yes. The word is correlation. They don't have correlation to the broad market. Is that what you were going to say, Matt?
Yep.
Yeah,
Yep.
of course you were. Yeah, I mean, if you didn't know that, I would be shocked at this point in time. So correlation. So the market was dropping today, like crazy, right? How many winners did we have in High Flyers Club today? Can anybody tell me? I mean, God knows you guys send me about 30, 40 emails. Maybe you had 3. I only had 2. Maybe you had 3. I only had 2. Now, what's interesting is they were both on the long side. So the market's down over 1%, and here we are making money to the long side on small cap stocks. Not bad, right? That's why I launched it. Yeah, 2. There was only 2, Beatrice. Yeah, that's why I launched it. Uncorrelated. The only free lunch Wall Street is going to give you, my friends, is diversification. Diversification is the other side of the coin of correlation.
Mm-hmm.
Remember that. No correlation means diversification. So it's the only free lunch Wall Street is going to give you. Okay? Think about that for a minute. Kevin said 33.7%. Not bad for your small cash account is up 33.7% in the High Flyers account. I'll take that, Kevin. That's very nice. I'll take that. So, yeah, just something for you guys to think about. Okay? And we haven't had a loser in February or March just yet. Okay. January was just god awful. Just god awful. Murphy's Law. Never trade the first month of starting a program. Okay. Of that second. Yeah. Okay. So we closed those trades. We could talk about it. So now I want to give you guys another lesson. I want to talk about day trading. And I want to first teach you something very, very important. Rob, we don't talk about stocks that we have in open positions here. Please feel free to send me an email.
I got the chat handled,
Yeah,
Roger.
you got the chat. I'll close
Yep.
it. Yeah, I'm going to close it.
Yep.
Okay. So actually, before I give you a lesson, this is a good lesson. I want to show you the stocks that are on my watch list, okay? Let me get those to you. SMR. How many times have I given you the stock in the last few days? Plenty. BSX. This is a very nice look. As soon as it breaks, oh, actually, it's already breaking this area. This is a very nice look. I may want to put this in a program, actually. I'm just thinking out loud. It's a very nice look. BSX and also BXP. And yes, I confuse these stocks all the time. Not only
I
do
can
they
see why.
they trade very similarly. They have very similar trends, and their ticker symbol BSX, BXP. I mean, it's Yeah, but anyway, completely different companies doing completely different things have no correlation whatsoever. But this is very nice. Very nice. Oklo. This is consolidating still, and it's a utility. This needs a little more downside here. Got to break below this area, and then we're good to go. BZ. BZ. Okay. Now, you would think, with all of the stocks breaking down now, that I would have 1,000,000 stocks to the short side.
Mm-hmm.
Nope. Not even close. That's it. That's my watch list to the short side. I usually have a lot more. I usually have twice as many. There's not that much. We're in a shake and bake environment, We're not in a clean downtrend. Now let's look to the upside. And by the way, a lot of the stocks on my, not a lot, there's not a lot of stocks, but there's a few stocks on my watch list. They're not that liquid, just FYI. In other words, you're not going to be able to get an option easy on them. But that's just how the balls bounce. And again, I had to be really choosy and picky here. This is Carmen Holdings. This is aerospace defense. This is a very good company. Very solid company. RCAT. Look how wicked this stock is. You do not want to day trade this stock. Very wicky. Very wicky. RCAT. AAOI. I scalped this morning. Made some money on the option. It was too fast to give to you guys, but I still like it for a swing. RTX, another defense stock that's defending the 15-day moving average. Okay. CME, again, Chicago Mercantile Exchange. Looks like it wants to defend the 15-day. One of the advantages of taking stocks off the 15-day is that it breaks the 15-day, you have a very low risk to reward. Let me give you an example to show you a visual, okay? So just to kind of give you an example. So look, your profit target is, your entry's right here, right? If it breaks this, and if it closes below the 15-day, like really closes like up here, you're out, okay? Your profit is right here. So you've got this much upside versus that much downside. That's pretty good. It's more than 1-to-1 because you can negate this trade pretty quickly. Well, Roger, shouldn't I be waiting for us to come here to make it an A line? If you make it an A line, that's great, but this market right now is very choppy and it's very back and forth. So you got to adjust to it a little bit. Which is why we took that trade that we took in the pit, the last trade. It was not a breakout trade. It was a pullback trade because the market is just doing this right now. It's not doing this. It's doing this. And you have to be mindful of that. Okay. All right. So those are, oh, sorry about that. That's CME. And then one more. My friend sitting in this room here, Matt, likes this stock. He loves the garbage stock. He likes the rat and he likes the garbage stock. Right, Matt?
I do.
The rat. Disney.
The rat. He likes the rat. Yeah, he likes Disney. Not right now, but he likes Disney. I wouldn't be buying Disney. He yells at me every time I want to short Disney. Don't short the rat. Anyway, right here, Waste Management. Nice looking stock. So I don't have a lot of stocks to the long list, and I don't have a lot of stocks to the short list. And that's actually really good news because that's telling us the market is not exhibiting the kind of behavior some of you may be experiencing in your portfolio. Somebody asked me this morning, when is this crash going to end? And I was looking at him in the morning. I was like, what crash are you talking about? I mean, we've been just kind of consolidating here for months. Here, let me move this up a little bit. Just consolidating here. We're not going anywhere, If we go somewhere, it'll actually flush out the longs and give us a better position to entry, but we're not doing that. That's why this is the worst market ever, because we have a lot of volatility and we're not going anywhere, which is perfect for day trading, but not swing trading. But my levels hold really well when that happens. Look at the levels I gave you. By the way, Raleigh, I did not change my levels yesterday, and I did not change my levels this morning.
And look at where they're holding. Yeah.
Look at the low today. Folks, look at my levels. I drew this yesterday morning at 8:45 in the morning. Look at today's low at 10 a.m. And look how we held these levels. And this is why I tell you, if you use all these fancy schmancy tools and all these futuristic, and you can't, price action, folks. Price action will tell you so much more than you could ever imagine. Just learn to read price action.
Yeah,
it's the
price action and looking left.
And looking left, yes. Look
Yep.
to the left and price action, right? Very important. Look how well we're holding these levels. What do you need all the other mumbo jumbo? I see people's monitors. I can't even see the chart. They have so much crap on there. Just
That's
put
true.
on a couple of levels in a chart and enjoy yourself. Okay, so I want to start off. I want to talk about day trading. And I want to talk a little bit about Trading Zone Live, which is our day trading program. And one of the biggest things you need to learn is when not to engage, or to engage very, very lowly with the market. Now, let's say that you bought a position. Matt, are you long right now?
Mm-hmm.
Okay. How long are you long for? How long have you been long?
A while.
That's what I thought.
Wow.
You got it out here somewhere, right?
10:45.
No, 10:45.
Right here? Yeah, right here. You got in right here. Right around here, right? Or right here. You got in when you thought this was going to break out. Right here. You thought this was going to break out and go higher, which we still haven't done. So he bought this position when the market was moving. You see this? Okay. But you see how right now the market's not doing anything at all? This is called low probability trading environment. Okay? There's a name for it. You can call it whatever you want. You can call it crap market action. You can call it watching paint dry, underwater basket weaving, as I like to call it. But technically, what this is called is low probability trading environment. It's when you're stuck between two levels. Even if we were not stuck between two levels, you see how the intraday moving averages are crossing inside all of price action, how they're going back and forth? And even without that, the best thing is just to use your eyes. See how price is just consolidating? Okay. Now, 30 years ago, I bought a trading book. 33 years ago, 32 years ago, I bought a trading book. It was called Street Smarts by Linda Brashke. Matt, can you bring it to me? We have it here. I paid $175 for this book in 1994. I want to show you guys something. It's there. I saw it there. Yeah, bring it to me. Yeah. Yeah. This book right here. Paid my $175 back in 1993 for this book. And I proceeded to look at it and learn all these different cool setups. Now, she spends 200 pages teaching you techniques. But do you know how long she spends teaching you context, market context? Let me show it. Let me tell you. Two and a half pages. 2.5 pages of market context. What I try to do, and here's the problem. When you see something that's 2.5 pages, you tend to gloss over it.
Right.
And you tend to go to the good stuff, to the strategies, right? The problem is, which she doesn't tell you, unfortunately, is, or she does in a very, in those 2.5 pages, is that when the market's doing this, none of those strategies are worth their weight in gold in anything. They're useless. They're completely useless. The point I'm making is not about this book, or how, if you get a chance, you should read it. It's a great book. I have a PDF of it in the members area. It's a nice book. I mean, I don't think it's going to really teach you anything new, but if you want to learn some stuff that's fine. But honestly, it's just okay. It's not great. But my point is, she spent 2.5 pages explaining to you the most important thing, which is context. You see, this book would really be worth $175 if she spent those pages showing you when not to trade those setups. Okay. So one of the biggest things I learned the hard way after spending my $175 was that when the markets are not doing anything, You can have the best indicators in the world. You can have the best setups in the world. You can have the best whatever you want in the world. None of it is going to work because the market is not setting up for day trading. Day trading. We're talking about day trading. So you always have to be mindful of low probability trading environments. Okay. This is not a low probability trading environment right here. This is a very low probability trading environment. It is very possible to make money here, right here, in this area right here. It is virtually impossible to make money here unless you're selling premium. Okay? Your options are going to start decaying. Your levels are going to start coming off. And your options just going to this is no man's land, and it's Friday. So I want you guys to always take into consideration before you enter a trade what the market is doing. Now, if you're already in a trade and the market just begins low probability, but it doesn't go out of your way, that's fine. You could stay in it. It's no harm, no foul. But especially if you have Monday's option, which you should have, you shouldn't have yet today's expiration option. That would be foolish. Or an E-mini, which doesn't decay. But my point here is don't get stuck. Don't get stuck in this environment. And don't go entering trades. Don't initiate trades in this environment. This environment will cause you to just not do anything. It takes your edge completely away. Okay. Now, I want to talk about when to enter pullbacks, when to enter breakouts, and when to enter reversals. Okay. A lot of this depends on what the market is doing on a daily basis. Okay. On a daily basis. Because let me show you. When you have a market that's moving like this, okay, like this, you want to trade breakouts and sometimes pullbacks. You do not want to trade reversals when you're looking at a market like this. Okay? What is a reversal? This is a reversal like this. When I have my upper bands and my lower bands and it keys off the lower bands. Same thing as when you have in Alpha Zone Pro, waiting for something to come down here and reverse and come all the way back up. When should you not be trading that way? You should not be trading that way when the daily chart is above the 8-day EMA, when it's trending like this, trending strongly. You should only be trading breakouts and pullbacks when the market is trending this way, when it has a very nice strong trend. Yes, to the upside and the downside. If you do not do that, if you're not trading, well, I just trade reverse. I look for bottoms. Yeah, good luck trading bottoms over here. You're not going to get off on anything. And if you do get off on something, the only stocks that should be sitting at bottoms over here are stocks that are ready to break down, which means they're relatively weak, and that's the last thing you want. So when you have a bullish move like this, like almost a parabolic move, you should be trading breakouts and you should be trading pullbacks. Breakouts and pullbacks. No more, no less. Okay? When the market begins consolidating, and I don't mean this. This is just a chop fest right here when they're on top, when every candle is on top of each other. Look at this. Every candle crosses the other here. Every candle is on top of each other. See this? This is you can't trade this. This is untradeable trading action on a daily chart. But when you have trading action like this, that's when you trade reversals right here. Reversals. This is here you could trade reversals. But when the market slows down and goes from this type of a trend to this type of a trend, you could still trade breakouts, but mostly pullbacks. What do I mean by pullbacks? VWAP pullbacks. VWAP pullbacks if you're trading the SPY. Shallow pullbacks. If you're trading on the Alpha Zone Pro, you should be only looking for likely moves. You shouldn't be looking for deeper moves when the market is moving at a pace like this, say 20-degree slope. The only time you should be looking at complete reversals, is when the market is doing this. Now, Roger, why are you trading on a 5-minute chart and looking at a daily chart? Because the daily chart is what gives the intraday chart its mojo. Okay? The daily chart is what gives the intraday chart everything it needs. If you're just looking at a 5-minute chart, you're doing this. You're going to miss, you're not going to see anything. You're not going to see anything. You need to zone out and look at your surroundings so you could see what's going on. Okay? Very, 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 very important. Okay. What are some indications that the market is starting to get choppy? Okay. What are some indications? I'll give you some really good indications. Let me delete this. Are you guys getting value out of this session?
Oh my gosh, yes, Roger.
All right. All right. Good.
Feedback is tremendous.
Good. What you'll notice is this. You see the moving averages? See the movie? They're all on top of each other. They're all just kind of, one is going up, one is going down. They're all going through the price. When you see the moving averages, the 50-day, the 20-day, the 8-day, I mean, the 15-day, the 8-day, the 50-day, when you see them all kind of just on top of each other, that's when you have a chop fest. Just like here, intraday. Look, intraday. That's the 15 and that's the 8. You see how they're on top of just the price actions going through them? They're not on top or below. Price action is not on top or below. It's inside. It's right there. Don't do that. Look at the example I gave you right here. See this? Look at how much below the 8-day price is when we're in that trend. Even here, that other example I gave you, see how it's riding the 8-day? Riding the 8-day? That's still an opportunity to trade pullbacks. But see right here, how price is in the middle, how the 8 and the 15 are in the middle of price. Game over. Game over. Game over. So what you want to see is you want to see the 8 and the 15 widening. 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 When they widen, you have much more probability of a clear trend. When they're narrowing and sitting on top of each other, that means you don't have a clear directional bias. That's a really good way. Ask yourself, how far is price away from the 8-day? Is it pulling away from the 8-day or is it coming near the 8-day? If it's coming near the 8-day and doing this, if the 8-day and the 15-day are inside the daily bars, there's no trend. Because what is the 8-day? It's the average of the last 8-day, of the last eight trading days. And then remember, it's exponential. So it's like 5 days. And so if the price is at the 5-day, that means it's at the 5-day average. And the 15-day EMA is like a 10-day. So this is basically telling us that price is exactly where it was a week or 2 weeks ago, you see? And if price is where it was a week or 2 weeks ago, why would I want to trade breakouts in that level? It doesn't make any sense. Okay? So the directional bias of the market is your compass to how you should be trading and positioning yourself for scalps, day trades, short-term trades, reversals. The daily chart is what tells you that. There's another major now. Well, Roger, that's great, but this is all after the fact. How do you know when this is coming our way? I'm glad you asked. See this right here, this graph? Okay. Those are all the major sectors. Okay. Let me show you what I'm talking about here. Okay. In which of these two periods do you think that the market has a better trend? Here or here? Box 1 or box A or box 2? Where the sectors are all on top of each other and just mumbo jumbo, or when they're actually moving away from each other? What do you guys think? I have the chat closed, Raleigh, but what are people saying?
Yeah,
Box 1 or
basically
2?
two.
Right.
Box 2 is what they're looking
Yes.
for. Yep.
Yes. Box 2. See how the sectors are not, most of the sectors are not on top of each other? See how they're trending, how they're moving directionally? Not all of them, some of them. Now you see how right now you have clusters of them being on top of each other, on top of each other, on top of each other. Very different than here. See, there's always 2 or 3 sectors that are outperforming the rest of the chop. You don't have that right now. You have much more. The range is still there. You have a lot of volatility, but they're on top of each other. Look at that. I mean, you have to. It's like somebody took like all these different ropes and played with them, and they're all tied up, and you have to untie them and unglue them from each other. Whereas here, you ever have those computer cords that get all clunked up on top of each other, and then you have to like undo all of it? That's what that's how the market works too. It's the same principle. It's the same principle. So my point here is a lot of you folks are not looking at the bigger picture. You're trading the same way. And here's why. You're used to trading a certain way, or you have somebody you follow, and that person trades a certain way. And he always trades, or she always trades a certain way. Well, this technique works in every market environment. No technique works in every market environment. Just like you don't wear a wedding gown to a barbecue, and you don't wear what you would wear to a barbecue to a wedding party. The markets are the same way. Remember, the markets are made up by live people who make decisions. So you have to behave appropriately in the right circumstances, just like you would socially. And if you don't, you're going to become someone's going to make it. You're going to look like an ass. The markets work the same way. You have to adjust to the market environment. If you're going to trade large cap or mid cap stocks. Now, if you're going to trade small cap stocks, like we do in another program, you can be in a bubble. You can be in a bubble, but everything else is fair game. Like small caps, I couldn't care less what any of this stuff is. If I was a small cap trader, only a small cap trader, I would not be doing my morning analysis or doing any of this because it wouldn't benefit us. I would probably just be looking at small caps all day. I don't know what I'd be doing, something else. But the point is you have to take these things into account. Well, Roger, what about volatility? Nope. Because you see, VIX is going to be really low here, and it's going to be really high here, but the market is still choppy. You got to get under the hood. You can't take the easy way out. So the way you do it is by looking at these sectors, okay? Looking at these sectors, obviously looking at the broad market, right? Looking at the sectors, looking at the broad market, looking at the number of stocks making 1 month highs and 1 month lows, looking at the sectors to see how the sectors are aligned or whether it's shake and bake or there's actually some directional bias here. Ironically, by the way, you'll notice something. Tech stocks have been starting to come up here. We're actually starting to get our tech mojo back, which I think is very interesting. Even in all of this mess, look at this.
Mm-hmm.
Look at this. Consumer discretionary, communication, QQQ, technology. Obviously, energy's up here, but consumer discretionary, they're starting to come back, folks. Look, let me show you a week ago. Semiconductors, technology, consumer discretionary, QQQ, down here, right? And look at it right now. Communication, QQQ, all on the 4th spot. I mean, if energy wasn't here, and the only reason energy here is because of the war.
Crude prices. Yep.
Right. So take this away. You got Bitcoin, technology, QQQ, communication, consumer discretionary, financial. Folks, this is almost as good as it's going to get. The only thing it's missing is semiconductors and biotech. But biotech I don't care about. Semiconductors.
And Roger, you were just talking about energy. I'll just give you a quick live update. A few moments ago, crude topped out at 92.61. Up 11% on the day. It's fallen off that just a little bit, but we're over $90 a barrel now.
Yeah, that's
yeah.
And remember, folks, commodities can be traded emotionally, just like stocks too. A lot of this is because there's an unknown right now, not because there's a specific level for them. It's just fear. It's fear. It's fear. And that's okay. I mean, that's okay, but we got to be mindful. But my point is, even with all of this mishigas and all of this mishigas that's been going on in the last week in the market, look where the strength is coming back to. And it's not like it was here. They were down here. They're coming back.
That was surprising to me when you showed that to us this morning, Roger, because I would
Yeah.
have bet the top positions would have been all defensive.
That me too. But look at notice the defensive stocks in the last couple of days, like Philip Morris and Colgate. They've all been coming down. Here, look. Here, I'll show you XLP. Look. Consumer staples, look, coming down. They actually didn't even make a swing high before coming down. Yeah, so they haven't been holding on. Look, CPB was on my short list this morning, right? And what was another one? Not Philip Morris. There's another one.
On this morning's short list, Roger?
No, there was a couple of.
We had CPB, we had BRBR, VITL, SMR, AXP, First Solar, and Pi.
There's an easier way to do this than you and I are doing it right now. There's an easier way to do this. Right here, consumer defensive. Here, household and personal items. Procter & Gamble. Procter & Gamble.
There you go.
That's what I wanted. Look at this thing Look at this thing. From 167 to 153, all-time high to the 50-day moving average when this war began. And that's a defensive stock. Meanwhile, look at MAGs. MAGs, still in this ballpark, still in this range. Same range they've been before the war started. Right? So again, folks, don't. I'm telling you, this is not a crash, a meltdown, or anything like that. Okay, let's see what else was on my agenda. I wanted to explain to you when you should trade each one. I talked about
the other
market.
Key thing is, when do you not trust market internals?
Oh, yeah, that's a great question, and that actually brings me up to something we saw yesterday. Oftentimes, here, I'll show you it's easier to show you than to just explain. Okay, you see this breakdown right here? This is SMH, this is QQQ, this is the Dow, this is RSP, MAGS, and IWM. This is pretty much what I give you those morning levels on. Not all of this, but most of these. So sometimes, and this doesn't happen a lot, sometimes you'll see a sector in the market that will overbear all other sectors. To give you a really good example here, again, it's so much easier just to show you. Just the other day, we were looking at this, and everything was down like 1%, 1.5%, 0.75%, and energies were down, there was a sector that was down 4.5% or 5%. That sector, when you have that, and that doesn't happen very often, and usually when that does happen, there's a major fundamental shift, like war. This doesn't happen often. This happens maybe 10 days out of a year, if that. I'm being generous, okay? Maybe 7 days out of a year, randomly, over time. And when you see the sectors are sort of kind of aligned, like they are most of the time, market internals work really, really well. But sometimes in those 7 or 8, 9 days, something really crazy will happen, like what happened a few days ago. The day when ADD, it was not yesterday, I think it was the day before yesterday, it was sometimes this week, but it was a day when ADD was at 2,200. And Matt and I were looking at the VOLD, and the VOLD was going down all day. But when we were looking at market internals, we noticed that sectors were way out of whack with each other. In other words, most sectors were down only like 1%, 0.75%, but energies were down like 4.5%, 5%. Okay. When that happens, market internals are going to be a little out of whack. They can't not be out of whack. Why? Let me explain. Remember I told you that market internals are like a barometer of your health. And I gave you an example of a car or a horse that you see from 100 yards away, and you're seeing a horse or a car do laps at 30 miles per hour, whatever, and you're seeing it and it looks great and everything looks good to you. But if you were on top of that horse or in that car, you would notice that it's making a weird noise or the horse is breathing heavily. You know, you could sense an animal or a person or even a car. We're people. We have good we have good sense. And, you know, if you're used to riding a horse every day and the horse is sick, you'd probably know it. Now, you could make a sick horse go pretty fast. You can. Nobody will know about it except the person riding the horse, at least for the first, 20 minutes, half an hour. I'm not a horse expert. I'm trying to illustrate a point. The point is this, that let's say you have a horse and the horse feels perfect. But we don't know this, but there's the horse steps on a nail. And that nail, if it goes just a little bit deeper into the horse's foot, it's going to hit its nerve. And the horse is going to completely black out. Now, you check the temperature of the horse. You check the coat. The horse is feeling great. And the next day, the next morning, the next minute, it can't do anything. It's completely like, ugh. That's kind of like the environment. Now, how often does that happen? Not that often. You can't trust everything else you're seeing on the horse because the horse has a very, very specific problem. And once that like a pebble in a shoe kind of a problem. Mm-hmm. And once that pebble is gone, the horse is going to feel great. So you're looking at the horse, you're listening to the horse, you're looking, like a car, the car is perfect, but it's got a banana. It's a $300,000 Ferrari, but it's got a banana in the tailpipe. Do you see that's what I'm trying to say. So when you have a situation like that, you can't just look at what you usually look at because it's not going to work. Typically, when you listen to a car, you listen to the engine, you look at the transmission, you look around, you see if it's leaking anything. A $300,000 Ferrari is probably not going to do any of those things. But if it's got a banana in the tailpipe, it's not going to get very far. So you have to distinguish when market internals are reasonably okay versus when they're not okay. And you'll see that when you look at this, and you'll see that one sector is just grossly out of whack with everything else. And that usually doesn't happen. So and it happened earlier this week. I didn't have a chance to explain it to you. And Matt didn't want to write down in Telegram channel for 1 million people, for 500 people, what I just explained to you. It would be a little difficult to explain without illustration. But there is the usual market internals, and they do a very good job of telling you when something is not healthy. But there are circumstances when, for example, the S&P will be down 0.50, the NASDAQ will be down 0.70, and the Dow will be down 3%. Well, your market internals are not going to be firing on all fours. The Dow has 30 stocks. 2 stocks in the Dow are really falling apart. It's distorting the Dow. Your market internals, meanwhile, look like something is wrong, and there's really nothing wrong. You can't adjust for that, folks. It's just something I need you to understand. And when you see things like that, you can't pay too much attention to market internals because they're out of whack, because something really bad is overshadowing everything else. How often does it happen? 5-10 times a year, max. As a matter of fact, it happened one time this year so far. Am I right, Matt, or did it happen more than one time? Maybe one other time?
Yeah.
It might have happened or it might have even been last year, end of last year. Maybe once every 2-3 months it happens. And the best way to tell if it happens is to look at this. And if you see that most of these are in line and one sector is like down, basically this is all up 0.46, 0.90, 1.5, and something is down 7%, market internals are not going to work. They can't account for that. It's too much of a what's the word I'm looking for? Of a shift. It's too much of a shift in price for it to take into account under normal circumstances. Basically, it's like Here's a perfect example. You take your horse to a general doctor instead of a foot specialist. The general doctor is not going to find anything. He's looking at the years, he's taking the temperature, everything's fine. The foot doctor is going to be like, hey, man, you got something right there. And boom, oh, okay, the horse. You've seen it in movies. I've seen it in movies where a horse can't walk and somebody comes up to the horse and is like, boom. And all of a sudden the horse gets up and it's like everything is perfect again. It's the same type of thing. It's the same type of thing. Folks, one thing I will tell you, and I'm hoping I gave you enough examples hopefully I gave you enough scenarios and hypotheticals to make you understand. But you can't look at the market the same way, and you can't have the same process. Your process has to be able to spot these things. Now, why do I start off every morning by going through this? To show you whether it's kosher or not. And I would tell you, hey, guys, market internals are just not that great today because energies are down 5% and everything else is fine. It's going to distort things. Or the Dow's down 600 points, but the S&P's positive on the day. Your internals are not going to work for you that day. How often does it happen? Very infrequently. Very, very infrequently. Most ever. Raleigh, you'll be happy to know that I did not open up my chat one time during this entire discussion.
So proud of you, Roger. Absolutely. Yeah. And I mean, once again, the comments here are just off the charts. I'm looking forward to sharing them with you, Roger, when we wrap up here. But people really do appreciate this level and quality of education because I think many people here had aha moments. And I think that's particularly important against the environment that we're in right now, where for many people, what's worked for you or been tried and proven is being challenged today. Okay. But as you said, don't freak out, don't jump out of a one-story window. Don't do anything crazy like that.
No.
Just understand what's going on. Continue to look at price action and just be careful and picky with what you do. And I think you would also tell people if you're nervous or scared, don't do anything. Sit on your hands. You've got to trade with confidence, whatever you do. No hope,
exactly.
No good luck, none of that stuff. You got to know what you're doing, but still. Fantastic. And, to that point, Roger, I just quickly want to let people know that if you would like to have to see a replay of this presentation or any of the sessions you've done this week, which have been stellar, this entire week you have devoted to day trading. And so from that standpoint, just go to Roger's YouTube channel and look for the VIP rooms from today, yesterday, Wednesday, Thursday, Tuesday and Monday. Everything you need is right there.
Well, thank you, and I appreciate it. Now, before I leave you before I move on, I just want to show you how we practice what we preach, okay? And I'm actually going to show you a trade from a pit program that we currently have right now, and it's moving against us, but I want to explain it to you. It'll only take a second. Do we have a second, Raleigh, before we move on?
I think we sure do, Roger. This is your show, buddy.
So let me show you. So most people know that in the pit, I pretty much trade momentum and I trade breakouts. Something like I have to be sick to trade a stock that's down on the day. I hardly ever do that. That's against everything I do. I do it in my other programs. I do it in the swing trading programs, but I don't do it in the pit. When I took this GE trade, I told everybody, I said, I'm taking a trade. I took this trade right here. Or actually, I took it right here. I took it yesterday. Where do we get in? 332, right here. Sorry, I got a little overzealous. We took the trade right here, 332. Right here. We took the trade right here yesterday, right here, okay? Because I thought this was going to be the bottom. Now, I would never, ever, ever, under normal circumstances, take a trade in this channel right here. I would wait for an A line to form. Why did I take this trade? Because I saw this didn't happen yet when I took the trade. We were like down here. I saw a pullback to the 15-day EMA. It was coming down right here, and I thought we were going to bottom out here and again stay choppy. Why? I would never in a million years trade that way in the pit, and I told you that. I said I don't trade that way. But I took this trade because I was looking for chop. I was looking for reversion, not momentum. So again, how often do I do that? Well, I've done 480 or 490 trades in the pit. I could probably say, and you guys have been there, how many trades have I done against the main trend? The entire time. Some of you guys have been there since day one. How many times have I traded that way? 3 times maybe.
I was going to say
4
handful max.
Less. I'm thinking maybe twice, 3 times. You guys tell me if I'm saying something incorrect. You guys are in that program. So just to show you that sometimes you have to change what you do in order to get a specific result. Now, I don't know how this trade is going to work out. As long as the trade stays above the 50-day moving average, I'm going to hold the trade. So if it's going to trade like this, I'll be fine. This thing can move. This thing moves an average of $11 a day. But yeah, see, Robert and Gail said maybe twice. Exactly. And I warned you I was doing it, to be fair. I told you that I'm breaking my rules. This is not how I trade. I don't like trading this way, but we have to adjust to the market environment. So my point is what I just taught you in this class, I actually do this. I'm not just telling you stuff. I actually follow these rules meticulously, but only when the situation calls for it. Okay. And the reason I did that instead of trading to the short side, because we don't have a lot of exposure. We don't have a lot of stuff happening to the short side right now. Okay. We don't have a bear market. We have a choppy market. It's a pickle we're in right now. Folks, my point is I practice what I preach. Okay. So let's move on now. I'm going to talk about the Trading Zone Live. This is the program that Matt sits and trades our methodology all day long. I would actually love to trade this all day long, but I can't because I'm live with you guys. And I have the pit, I have Trading Zone Live. I mean, I have high flyers, and I have 4 swing trading programs that I have to fulfill. So
Busy boy.
I'm pretty busy. So Matt is doing this, and Matt is really good at doing this. So I'm just letting Matt do this, which is fine. And we're 12 feet away. We're all here. I never said.
Roger, quickly, I just need to let people know, if you were watching this on YouTube, we're about to stop the stream to YouTube because what we're about to get into, they don't like us streaming on YouTube. So from that standpoint, they have no sense of humor, Roger. They're very serious about this.
Yeah.
So if you're in YouTube, come on over. Join us in the
Right.
Zoom room for the rest of this presentation.